Welcome to the daily update. Today we're going to go over crude oil. First, identifying the market state. I want to go over the grid for one moment. You can always click to the help button and take a look at the market symbol. So what we're identifying here from the grid is the general market state type. So this is a trending market. We have our signature tags, and DNT is bear trend. And then we are also identifying the structure point. Where's the R level and how will that influence the market state? So a market that's in a bear trend type state, that's when the attributes are trending negative, it's a negative bias, it's good momentum market state, and we expect volatility to increase. The biggest thing about any trending market is that it holds structure. If it's holding structure, we can anticipate that trend to be true. And if it's not holding structure, then we have to question, are we in for more of a digestive trade for the session? Next thing we want to look at is the structure of the market and sentiment. And sentiment is negative. Our level is at the upside pivot. So that's in line with the state. So we've got a negative trending state with a negative sentiment bias. So it's pretty negative. Our optimal strategy are going to be on the sell side. We're going to fade momentum into this resistance, and also if we get a head fake, we're going to accept a reversal signal, and we're anticipating this market to hold negative structure and start a new leg lower. On the hedge side, we are interested in the downside pivot, and if the market does give us a failure there, which would be a signal that we might be starting a new leg lower, and it doesn't follow through, doesn't get through this 1 star, and we can't maintain structure below the downside pivot, we might get a reversal signal. And so we're going to look for that. And the other key hedge theme strategy would be a breakout above the R level. So if the market cannot sustain trading below the UPR, we would have a buy R breakout that would be part of the hedge strategy theme. So again, we're always looking to identify what theme is in play. Are we in an optimal theme day? Are we in a hedge theme day? Or are we just going to go sideways? So we're on the market at 7:20 a.m. Central Standard Time. We come in, we look at the overnight action. The market's been hugging the directional at 48.44. We know our optimal strategies are to sell higher against 49.69 UPR level. And the market is currently in a corrective rally, kind of trying to hold structure above the directional and making a play for our resistance. And the market starts to break down. We see a break in structure underneath the DIR. I'm putting an alert distance around the major inflection point. So in the crude oil, we're looking at 20 ticks. So right now we're looking to determine what strategy theme is potentially playing out. So we want to see a rally here to sell. We're not near a hedge theme. So we're either expecting a sideways digest or potentially a shift into this negative momentum. And the market gives us a move outside the alert distance, signaling the potential for a move into the optimal strategy theme, negative bear trend, looking for the market to start to build negative structure. So we're able to accept sell signals in this zone. So if your tactics are generating a sell signal, it's a valid opportunity here. Again, we're looking for at least one average price map distance, or APMD, which would be from the directional down to the downside pivot. If this opportunity was happening at the upside pivot R, this would be a leverageable opportunity. The fact that it's at a directional, it's not necessarily a playbook play, but it's in line with the strategy theme. It's at a major inflection point. It's normal size. If we get a failure here, it's in line with the strategy theme, but it would be even smaller size with a smaller target. So since we are in a bear trend and we could see a new leg lower, we have to anticipate we could see a move down to 46.23. You always want to keep your trade vision of what if. What if this market holds structure? What if this market makes a new leg lower? And if we do break out of the critical range and we look for 2 APMDs, where could it go? It could go down to 45.11. It's still early in the session, and we know that if we do get a move through the alert distance to the upside, that's going to negate this directional opportunity. And the directional, as a rule, is a rotational number. This is exactly the kind of action that happens around a direction where it rotates around the level. So it's seductive because there's a lot of opportunities to get in, but it can be choppy. So that we need to consider that when we're entering a strategy here. We don't want to get turned around. We want to make a commitment. And we also want to make sure that we're there if the market we do get stopped out, if we're accepting any sell signals in this zone, that we're able to have enough capital to risk in the highly leverageable zone here around the 49.69 area. So the market comes through and it starts to sell off. We attain the minor level at 92. I've put a band in around the downside pivot. That's kind of the support area zone that we should expect the market to make a play for. And you can see here it's kind of stair-stepping the price map. The more aggressive a trend is, it'll do this, and it should maintain a trade below here. It's really going to start to accelerate a trend. The market starts to trade back above here. We could get a push back up into the directional area. Otherwise, we're anticipating a move for the DP. One thing to consider on position management is what's your target. If your target's the DP and the market's here, where's your trail stop? It shouldn't be above here. You shouldn't be risking more than what you're looking to make. So you need to bring down your trail stop just above the 92 level, and the market gave you a little structure here. Again, this is just position management tactic. The bigger picture is still negative strategy theme, and that's what's important. And there is the potential for this market to make a new leg lower. Not that it's going to happen, but it's definitely in the cards, and it's in play with the textbook strategy theme. Key thing is to keep a fact focus. Market states bear trend. Our strategy theme that's in play currently is the optimal strategy theme. And we're going to maintain that tone and look for tactics that are in alignment with that strategy theme.
So I've enlarged the chart to focus on the 47.92 minor level as a position management tool. We're looking at a market that is performing to expectation with the optimal strategy theme, bear trend, and the market is moving lower from the directional. And we were identified the area to accept sell signals. So if we're short from this area, the market's moving towards our initial target at the downside pivot at 47.36. It's taken out this inflection point. We can also use the same variance and alert distance where we're using the alert distance around the major inflection points of 20 ticks. We can dial in with a smaller variance around the minor inflection points. We always want to focus on the facts and what is true, and a true bear trend is going to maintain negative structure. And if we're looking for the trend to accelerate, it should fail from a price map level and should maintain a trade below it. It doesn't always do that, but we need to anticipate that it will. The best trades are going to perform to expectation. They're just going to go. And if they don't, it's a tell that something might be up. So it's always best to anticipate that the market is going to maintain structure and it's going to go. Another thing to consider is what's the profit objective. So if you've sold the market off the directional, it's moving lower, and your target's at the DP, you need to consider where do you want to make your trail stop adjustments. And so the price map levels can help with that, and you can use these variances to accommodate that as well. Do always recommend a multi-unit approach. So you have multiple units, whatever your unit size is. One unit is going for a shorter term target, one unit is going for a longer term target, and then one unit is going for a what if target. So how can we use the price map here to work this position? So on the shorter term target time frame, we want to be more aggressive. We want to lower our stops. We can use this variance to do that. We're expecting the market to maintain structure. So the market moves forward in time and we get a break. The market breaks through the variance of this minor level. At this point, one of our trail stop adjustments has been just dinked out. The market quickly moved back under, and then it continued to break back below. So in this situation, it's good to note, what is the expectation? Expectation is the market is going to move lower. The trend is still in place, and when the market comes back up in this situation, it does give us an opportunity to put those sales back out with our risk defined if we want to. Again, the variances aren't set in stone, but they are a good guide, and you want to use them as the area. And so in this zone, it's you're in a bear trend and you're looking to accept sell signals. And so again, this would be if you have no position on, it's a valid opportunity to accept sell signals with the expectation the market's going to continue down to the downside pivot, if not make a new leg lower. Variance can also be kind of a guide for stop placement. So if you're taking a signal at a minor level, kind of using that variance as a guide, absolutely you're going to have situations where you're going to get dinked out, but it's always looking back to the facts. What's the underlying state? What's the underlying structure? Where am I within that structure? And what's my opportunity? And what am I willing to risk to make that opportunity? And here the market continues to perform to expectation of the optimal strategy. The big thing is we don't want to get turned around because we had a bad stop, and here the market provided us an opportunity to re-enter. But now as we're approaching this, we're coming into this support band, and we came into that variance. And so this is another position management. As the market's approaching these levels, what are we willing to give up for a reaction? We know the market now can react back up to this level, and we're going to be giving back that money, so giving back 30, 40 ticks. Do we want to do that? What are we looking to make? As the market approaches here, we're still coming back into accept sell signals against this area, and the market's probing into this support, kind of classic bear trend action. So here's some short-term trading opportunity where you're getting in sync with the market. What's the underlying foundation bear trend? Is it holding negative structure? Yes, it's been holding negative structure. It's working, stair-stepping its way down. Do we want to accept sell signals here? No, we don't. This is where we can really define our risk. We don't want to be in a situation where we're getting this sharp positive squeeze against us and shaking us out or turning us around. Do we want to fade buy momentum into here? Let's say our oscillators are oversold. No, we don't. The only time we're really looking for an opportunity on the buy side is more of a reversal. So we'd like to see an emotional sell-off before we get involved in a fading this negative momentum, because we're in a bear trend. As we move forward, we can see the market working into this support. We should anticipate a reaction here. It is a major support level, so at this point we have to make a decision. The market can bounce back up to the 47.92 area, back into this zone from here, and it's still in line with the negative structure of this momentum. What are we willing to give up for a break down to the first target, which would be 46.63? So that's the decision that needs to be made at this time. Here the market is confirming the validity of the downside pivot. So this is typical action of a bear trend. You're getting a push into support, confirming that it's a good level. It's not able to come back up to the previous structure points. It's too weak to do that. Key thing here is not getting turned around. As long as the market has this negative structure, we're still viewing it as a negative momentum. And then when you get these situations where the market confirms the inflection point, you can put more of a hard stop, because it really should, if it's going to turn here, start to build positive momentum and just go. And if you get this break here, this is the downside pivot, and so we're getting this real aggressive negative emotion. How the market reacts off these variances is a tell. The weaker it is, we should expect it to retrace and ideally give us a reaction off the downside pivot to then follow through, but it doesn't have to. And here we come into the end of the day, and the market is closing below the variance. This is just very weak, and so we've been in a bear trend. We had a negative signal to start the day. We've held negative structure the whole day, and we're in line for an extension to the downside. Key levels, if you're going to take a position home, would be below the downside pivot. But what's the expectation? we can have an expectation that the market can make 2 average price map distances, and literally having a target of 45.11. And what's the major structure point? The first structure point is going to be the downside pivot. Second structure breakpoint is at this time is 47.92. So figuring out what's my opportunity, what do I need to risk, and to make those your stop placement adjustments. For more information on how to incorporate JS services into your trade plan, please contact us at info@jsservices.com.